Good morning, everyone. Welcome back to my channel. It's a beautiful day outside today. And, before we get into anything, I just want to say you are already blessed if you woke up this morning, if you woke up to some good energy, good vibes, if you're healthy, you have no ailments, nothing at all like that. And that also means that you are super capable of making a ton of money. All right. So with that being said, I'm looking at this beautiful car. I'm not sure if you can see it. That orange car right over there. It's real beautiful, real nice. You know, all I'm looking at is money in this neighborhood, prosperity, growth, resilience, hard work, and hard work to obtain anything that it is that you want, right? So I woke up this morning. It's my girl's birthday. I got a lot planned today. We're about to get some breakfast. Then we're gonna go to this like virtual reality gaming thing. Probably open up her presents and then have a nice dinner. But before we get into that, student loans. Student loans are about to resume in October. And, what we've been saying from day one is that we should focus on paying those off if we have them and, get our mind right. I believe there was a period when there was zero interest accruing on student loans. No payment penalties, nothing like that, nothing of the sort. And, back when I was a mortgage lender, there was a lot of people who were buying houses. I'm talking about the maximum amount of house that they can buy with the understanding that, they didn't have student loans stopping them, right? So here's the thing about mortgages that some people may not know. When you go for a mortgage, a car loan, or any type of debt, credit card debt, can even stop you from purchasing a house, right? Because they're going to look at your debt to income ratio. So debt to income is what is calculated to say, okay, this person can take on this much house. So for example, if someone has a $50,000 salary and another person has a $50,000 salary and one has a $400 car payment and the other one doesn't, the one who doesn't have the $400 car payment can actually buy $400 more a month of house. That's simply how it works. All right. Now, depending on the mortgage lender that you go with, they will allow you to borrow 47 to 49%, right? Depending on the type of lender that you go to, some may be a little bit more conservative and they'll say, okay, we'll only allow you to borrow 47% of home. So I worked for Chase Bank at the time, and Chase Bank is more on the conservative side, and they tend to work with more better credit borrowers, right? So not only are they going to only allow that 47%, but they're also going to work with people who have 700 credit scores and above. And mind you, you can purchase a home if you have a 680 credit score. So that's not out of the question for somebody to want a house and have a 680 credit score. So with that being said, and I was in the refinance department, so you need at least a 680 to refinance. I believe you can purchase a house with a little bit less than a 680. You might be able to purchase a home with a 660. I got to do some research because, I've always had good credit. So sometimes when you have to look at the other side of things, it can be hard to do so, but it doesn't mean it's impossible. All right. So for all of you who are working on your credit, I'll be sure to get that information for you as well. Now that student loans are being resumed, let's take it a step back. Some people bought cars that they couldn't afford, right? Some banks are going to say you can't afford this car because you have student loans, blah, 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 blah. Well, from 2021 to 2023, a bank wasn't able to dock you on that because they were paused because you had no payment. So now if you bought a car that was beyond your means, well, it's time to send that right back to the good old dealership. They're going to have more repos start and a lot more things occur. So we won't really see car repos for student loan cars that are getting sent back until about February of 2024. So a lot of people are going to say, hey, Festus, you told us that there was going to be a lot more car repos, a lot more houses being sold and back on the market. Well, yes, all those things are true, but the bank is going to give you some time to try to pay it off because they don't want that depreciating asset back on their lot. We all know cars go down in value, especially if you bought it brand new. So we don't want a whole bunch of new cars back on our dealership lots, right? So the bank is going to try and get you to pay that $2,000, $3,000 a month because they understand that it's better to have you pay it than try to find somebody else and not make any money whatsoever. So with that being said, it's in their best interest to try and work with you. Now, if you simply say, yo, F this car, I'm done, or if you simply say, I'm going to try to pay it, you pay 1 month, you miss a month, you pay 1 month, you miss a month, that's just keeping you broke longer. I would tell you to trade it into the dealership, sell it. If you have a second car, sell it now because you're just going to spend a few $1,000s to simply not have the car at the end of the day. And yes, I have seen some people go through that experience where they're paying $2,000 a month for a vehicle that they can't afford, or to just turn it right back into the dealership instead of having $4,000, $5,000, $6,000 in savings. They now have nothing and no car. So again, that's just something to keep in mind. So with that being said, yes, we're going to see a lot more car repos right around February, March, and then into April. Right around June, we should start to see it slow down. We should start to see, summertime. The people who have money is now going out to vacation and things like that. But for the most part, we're going to see cars are always the first to go, and then it's housing, because people would rather let go of a car first before they let go of their house. So understand that. People will have to cut back. People are already digging into their 401k. People are already, saying that they can't pay their student loans. They're going to need to get on different types of payment plans. And so we're in for a whirlwind. Credit card debt is going up. 401ks are getting depleted. Raises are not coming anytime soon. So we're at a point now where if you haven't been paying those student loans, and if you have been buying more than you needed, if you have been purchasing things that were beyond your means, all of that is about to catch up. Now you still have a month or two to get ahead of the curve, because I understand that you might not have heard this before, but you still have a month or two to get ahead of the curve before it's too late. So go ahead and start to buckle down, figure out where you can cut costs. Maybe you'll be able to maintain that car. Maybe you'll be able to maintain that house. But if you continue to live above your means, you'll be in a situation that, unfortunately, a lot of people will find themselves in, unable to repay their debts and simply just behind the 8 ball altogether. So I'm wishing you all the best. Please make sure you like, comment, and subscribe. If you don't have student loans, how does it feel to not have student loan debt? If you do have student loans, what are you doing to repay them right now? Or are you trying to repay them? Or do you just say, you know what, F it, I'm going to pay the minimum, whenever that is, for the rest of my life? Let me know in the comment section down below. If you're on Rumble, please subscribe. If you're on YouTube, please subscribe and hit that notification bell so you're alerted every time I drop a new video, and so that you're more informed than the average person in America today. All right? Peace. Love you all for tuning in, and I'll see you on the next one.